It's not a surprise that China holds one of the largest reserves of the US dollar, mainly through its treasury bonds. But in recent times, Beijing has been making a shift slowly but strategically, reducing its dependence on the US dollar, a process known as de-dollarization, which could actually accelerate this year in 2025. And that raises the major question about its potential impact on the US economy and on everyday American life. So let's actually talk about China's strategic dollar shift and what the numbers show. China's holdings of the US Treasury securities have fallen from 1.3 trillion in 2013 to around 800 billion in 2024. This reduction is not just financial, but it's also geopolitical. We have currency swap agreements, where China has signed deals with over 40 countries, including Brazil, Russia, and Saudi Arabia, to sell in yuan, bypassing the US dollar. They have gold accumulation. The People's Bank of China has stockpiled more than 2,000 metric tons of gold, hedging against a weakening dollar. There's also bilateral trade in the yuan. China is increasingly pushing for oil and commodity purchases to be settled in yuan, especially with major suppliers. Now, why might 2025 mark a tipping point? Several dynamics could actually drive a more aggressive dollar sell-off. For example, geopolitical tensions, the US use of financial sanctions, like those placed on Russia, signals to China that dollar dependence is actually a vulnerability. Economic sovereignty. Beijing wants greater control over its financial future, reducing reliance on a currency managed by the US Federal Reserve. US fiscal concerns. With US debt surpassing $36 trillion, fears of long-term dollar depreciation are not unfounded. So from China's perspective, diversification is risk management. Now what happens if China dumps the US dollar? If China accelerates its dollar divestment, the economic consequences could actually ripple very quickly through global markets, and it's going to impact right at Americans' wallets, because de-dollarization will ultimately weaken the US economy. This leads to fun things like higher interest rates, where China selling US treasuries increases bond supply, which then lowers bond prices and raises yields. The US government would then have to pay more to borrow money, pushing up rates on everything from mortgages to credit cards. For consumers, this could mean fewer home buyers and increased household debt burdens. We could also have a weaker dollar. Less foreign demand for the dollar would ultimately reduce its value, which has mixed effects. So imports become cheaper for foreign buyers, which can potentially boost the US manufacturing and agricultural industries. Imports, however, become more expensive, and that's going to hit people in their wallets. Electronics, cars, and gas could all see price hikes. For example, if the US dollar drops 10%, a $1,000 iPhone might end up costing us $1,100. There can also be things like stock market volatility. If China triggers a large-scale sell-off, global investors may actually pull money from US assets because they fear instability, which could then drag down stock prices, especially for multinational corporations and bond-heavy portfolios. This can put retirement accounts like the IRA or 401ks at risk. And this is going to affect most Americans in a pretty bad way. You also have job market effects. Sectors that benefit from exports, for example, Boeing, US farms, they can gain ground. But import-heavy industries, like retail, might actually suffer due to shrinking margins, which can then possibly result in layoffs or just overall slower hiring. Now, the long-term scenarios, going from the most mild to the most major, the best case is that China gradually shifts away from the US dollar without disrupting global markets. The Federal Reserve adjusts rates to then stabilize the economy. The worst case that can happen is that it's going to be a sharp divestment which triggers a dollar crash, leading to stagflation, and aggressive Fed interest rate hikes, leading to a recession. The most likely case, however, is probably going to be a slow erosion of dollar dominance, with the yuan and euro playing larger global roles. Americans which then would have to adapt to higher prices over time. Now, what should you do about this? Because while a sudden collapse of the dollar is unlikely, a slow decline is very possible and probably quite likely. So, to protect yourself, you should consider the following: diversifying your investments, including into precious metals and international assets. Watch for inflation in consumer goods and plan accordingly. In a nutshell, it's most likely going to be a slow burn rather than a sudden blaze and change. China isn't going to dump the dollar overnight, but the writing is on the wall. The world is becoming multipolar, financially and politically. So for the average American, the biggest risk lies not in collapse, but in the slow squeeze of inflation, rising debt, and economic uncertainty. So that's why information is important, and it's going to make the difference. Thank you for watching, and please subscribe.